Alright, welcome people, welcome back. This video is going to be quite quick and snappy. I'm still in the office. I'll be going home today. But nevertheless, let's head straight into it. We have two things to discuss about as usual. Still the 4 hours test update and then the supply and demand strategy update. I have learned a lot, but why am I going to be teaching supply and demand today? I'm going to tell you what I have learned about supply and demand. Now, for the update, it's going to be real quick. On the update, we have this situation right now. For the past 2 days since my last video, this has been the situation of the market. It has been ranging, or rather it's been moving sideways. It has been ranging seriously for the past 2 days. You can see this first candle started out on the 5th of March around 9 p.m. and it's been like that all the way till right now. So we don't know the direction the market is going to take, and I think it's because the US are beginning to have more stable economy compared to what they used to have in the past few days. It's been very heavy. There's been tariff and everything, but nevertheless it's all good. Then again, for the S&D, that is supply and demand, you would realize that if we dive into that place, right, you would see that the market is literally within a zone. It's in a 4-hour zone, 4-hour supply zone. As you can see right here, this is a 4-hour supply zone, and the market is currently within a sandwich between this zone. This is a daily zone. This is a daily zone. You can see the movement candle, the indecisive candle right here before this explosive candles. Very indecisive compared to, and matter of fact, actually, in my opinion, I'll say all of these are indecisive candles, this 3 or this 2 basically. But I just want to specify this particular one because this is like the clear indecisive candle right here. But in my opinion, I'll say this is the indecisive candle. But this point is okay, it's fine. All the way to the week, it's fine. So you can see we are within the week zone, and this is where price is basically. If I go all the way to the right, you see this is where price is. And price is finding it difficult to make a move up or down. So depending on whichever one it takes, it wants to take, I'll start taking supply and demand trades also on this other account. That is the way I'm going to be doing it. So this is the update, and I'm supposed to give a strategy teaching on like what my strategy really is and everything in telling my strategy today. So let's just let's blow it off as fast as possible. Not really as fast as possible, but more like adequately. So I'm going to just pick up a random pair. This is a British pound, Japanese yen, right? So if you want to learn how to draw supply and demands, it's very simple. You just need 2 to 3 time frames, right? 2 to 3 time frames, but it's more complicated than just 2 to 3 time frames basically. For me, I use daily and 4 hours, and then once in a while I go into the 4 hours to see how effective the market is moving towards the direction I want it to move. So there are 3 things in S&D I've learned from Bernd Skoropinski. There is the first thing is you need to do the location of the market, that's the location of price. Then you need to know the direction, that is the direction of price, and then you need to do your zoning. So location of price, right? Location of price is like this. So on the daily chart, right? On the daily chart, you see this zigzag indicator I have is specifically meant to tell me at what points did price turn significantly. So normally I'm supposed to have this a bit higher than 0.05, somewhere around at least, let's say 4 or 2. You know, this is like the higher time frame changing points basically. If you come up to, let's say, a weekly, you notice that those are like major turning points for the weekly, right? So on the daily, I'll just go straight into the daily. So on the daily, I want to get my supply and demand zones. I could draw 2. So what I do is I just take this line. This is where price is currently, hard right, and we come all the way down, all the way here. So normally this would have been a very perfect supply demand zone, but guess what? It has been mitigated. Price has used it, so it is no longer useful. So what do? I put the line below that spot, right? Below that spot, and then I go forward, or rather backwards, to look for where do I see price push consecutively? You can see there's this consecutive push of upward trend here, but you need to figure out where are the indecisive candles in this place now, right? Where are the indecisive candles? Now, if the candle body is not more than 50%, I personally like 70%, but if the candle body is not more than 70% or 50% of the entire candle, that is including the wick and the candle, if the body itself is not up to 50%, I prefer 70. If it's not up to 50%, then you shouldn't basically use that trade. Like, you shouldn't use it as a you shouldn't see it as a decision candle, right? So right here you can see this is very much, but the candle wick is so long, it looks almost the same length with the body, but the candle wick is small compared to the body. You can see this one right here, right? So I'll start with this one all the way from the body all the way to the lowest point ever, covering all the spots. Now, why didn't I take this? This is a decisive candle. You can see it's a decisive candle that comes in and move. This is also a decisive candle compared to these candles and these candles. This is decisive. So you can come here or you can go all the way here, but it doesn't matter. You get the full range, right? This is my first demand zone, right? This is my first demand zone. Now I'm looking for the second demand zone. Second demand zone is right here. You can see it right here clearly. It's just so obvious. You can see explosive candles coming out of it. Very, very explosive candles, consecutive of these explosive candles. Now I have gotten demand zones. To get supply zones, I'll simply go back to where price is. I'll take away the horizontal line I had at the bottom because I don't need it anymore. And I'm going to start from the same point where price was, right? And I'm going to go hard like this. And using the line 2, the horizontal line 2, we're going to focus on this. You see, these are not zones, these are not zones. And then I'll focus on this point. Now you can see that explosive rally base drop. So this is the base. I prefer the preferred method. I don't like to take the wick. You can see on the other side it was the wick, but this time I don't need the wick. I don't want to use the wick. I personally don't like to use the wick. So all of this, I can see a candle. And then all the way from here, I can see the very next spots. You can see this explosion 1, 2, and then all of this base. This is also a base. You can call it a decisive candle because it's full, but it's also a base because compared to this candle, it is very, very small. So now I have at least 2 up, 2 down, right? 2 supplies to demand on the daily. Now I'll go into the 4 hours. On the 4 hours, I'm going to do the exact same thing we just did, but now I'm going to be doing it inside the daily zones, right? Inside the daily zones. Now in the daily zones, I have this right here. All of these points here are all part of it, but the truth is that is what you have seen, but this is what it really is, right? This is what it really is. Now if you look inside here, what do you see? This particular candle is this candle, this one right here is the first zone, and then this one, this second one here, very indecisive, is the second one. So these are 2 zones within that supply zone that I need to look out for. Then, so I don't know if price history gets all the way to this point. Okay, it got all the way to this point. Let's pull out deeper zones, right? So right there you can see all of this. This is actually an indecisive candle. Though it's explosive, it looks explosive, right? It looks, but it is not. Why? Because you can see that the wick, if you compare the wick to the body, it is roughly 50%. To me, I see it as an indecisive candle. So I'll just highlight the whole thing. So in this point, you can see that all the way from here is where the major indecision is to me. All the way to this candle is for me personally, not. So now I have for the supply zones. Now for the demand zones, where are my indecisions, right? Where are my indecisions? I have some right here, and you can see all of this has been mitigated, right? So you can see right now this is a prime time to you don't need to do any more analysis. You could aim from distal to distal I'm not explaining this all that in depth, but this style to this style right now, and you can see we are now in a very fine zone, a cheap zone, right? This is a cheap zone, and what I needed to see was price do exactly what it has done here, come into the supply zone, to the demand zone, and move up with aggressive pushes. You can see the Fed, you can see aggressive movement right here. You see this base right here, and you can see the aggressive move. So this is like a prime time for me, and I'm going to buy this market right now. So I'm going to buy right here, and stop loss. My stop loss is going to be below this supply zone, below the demand zone on the 4 hours. But guess what? It could go all the way down here, right? It could go all the way down here, but I don't want to. I just take it all the way here. I could decide to stay here, right? And then expect it to find its way to at the probably 78% of the market, which is a 1 to 4. Or I could view it on the daily, right? On the daily. And I'm going to focus for this daily proximal zone. Put my order right here. Now, this order ought to have been clicked in here. After seeing this move, I would have clicked in around here and then stop loss here. Stop loss right here. This is what the order ought to have been, but because I have missed this point, I can only use rep price it's at currently. So for me to use this place, I need to look, is price currently within any zone to be utilized? Now this is a zone, right? This is a good zone to utilize. So I'm going to put my order right here and put my order right here. It's a pending order all the way to the proximal zone of the proximal supply zone. So let's place this order. It's a demo account, don't forget, it's a demo account, and we can take this risk sometimes. So risking as usual, you know, I like my stop loss below the bad zones, right? So stop loss in percentage of my equity, I'm going to risk 1% of the equity, right? 1% of the equity. And you see that it's $100 on the spot. So risking $100, right? Risking $100, but that's not what's something. Sorry, that was a mistake. That was a mistake. I was not supposed to do that. I'm supposed to do it like this. I want to risk $100, right? And okay, so this is the closest to $100 I can get. I don't want to go above $100, so 0.02. It's above $100, so this is the best I can get for this trade. So $83 to get $108. It's going to be a long ass trade. So place a buy limit, and we let this market run. So my dear friends, we've seen the updates on the 4-hour fair value gap test. We've seen the updates on supply and demand, and then I've taught you a small look at the strategy I use for supply and demand, and we want to test it and see if this is going to be useful or better for us, right? This is going to be better for us. But until next time, I tell you thank you for watching, and catch you all on another one. Peace.